All right, traders, we are looking at the Aussie USD pair. We're going to start out looking at the weekly and then go down into the smaller time frames. So, looking at this from the weekly, we can see that we have been above 70 cents for so many months. We've been above 70 cents for about 4 months already. Looking at what's going on with the standard deviations, we seem to be playing in between the one standard deviation and the two standard deviation. Being that when we hit the one standard deviation, we usually migrate up to the two standard deviation before we actually decide to hit the brakes and reverse. Looking at this from the weekly, we have pretty much rejected the 0.725 area for now, but I am expecting further strength. This is a pair that's heavily influenced by the United States stock market and, of course, the dollar. When we look at a smaller time frame, we can see that we have been pushing upwards in a uptrending range. And it's from this uptrending range that I keep my bullish sentiments on this. We may go down, yes, but that's really not my. I'm really not paying attention to that at the moment, just because I am so bullish on the stock market. Looking at the IV rank, it also gives me another reason to be bullish. We're pretty much facing a lowering IV rank, which means the volatility is consolidating. And generally, when volatility consolidates, traders are usually more complicit in purchasing instead of selling. And that's what I believe will continue as we progress throughout this Paris movement. Now, looking at a smaller time frame, 4 hour time frame, looking at the fibs specifically, we can see that we did have a rejection of this 80.75 area. Now, usually when that happens, price tends to rebound down to the 50. And if we are to continue seeing this pair move up, I would not want to see this have consecutive closes below the 50. If we start to have consecutive closes below the 50, that tells me that the market is really not accepting a higher price on this pair and to be looking for prices to actually go to 70 cents. Now, keeping that in mind, I did say that we're following that one standard deviation. Now we've already rebounded above this one standard deviation. So what I plan on seeing, we may have these drawdowns, but overall, I am not looking to actually be short until we actually hit this one, get near this one standard deviation. As you can see back here in August 31st, we got close to that two standard deviation and we fell back down to the one standard deviation. January 10th, we touched that two standard deviation. We didn't really get close to the one standard deviation until we actually spent some time going sideways. But then, of course, yeah, we pushed up. And what started the whole trend between staying in between the one and the two standard deviations is the cross above the one standard deviations on May 2nd. So pretty much targets for this is to stay above, what number is this? 0.72, 0.1 or 0.7124. As long as we stay above that, we should be good to see this pair continuing going up, but it kind of gets concerning if it has multiple closes below.